Bear market is here and the 11-year bull market has ended. And at this point, the market is pricing in a pretty severe recession in the next few months. There's been many factors that have led us up to this point here today, but it's important now to focus on our portfolios and build out strong positions which will weather through this storm. We want to really focus on businesses that will be stronger in the future, that will not only get through this, but will also come out stronger from this. And this essentially will help us get to millionaire status if we stick to our strategy and pick solid companies. Remember, recessions and bear markets are when millionaires are made, and if you want to learn how you can be on the right side of this trade and be one of those investors that actually profits from these tough times, make sure to watch this whole video through, because I'll be going through some tips that I'll personally be following and really explain to you why we need to be rational in times like this. As always, if you want to see more videos like this, guys, you want to see me cover more topics like this during volatile times in the market, all you have to do is hit that like button down below to help support the channel and share this video with one friend who you think could benefit from these volatile times. So over the last year and a bit, this is what the S&P 500 looks like. Straight nosedive down, and if you invested anytime during this period, your portfolio is most likely in the red right now. But it's important to use perspective and see things on a long-term view and not be short-sighted when it comes to investing. So now if we look at the last 10 years of the S&P 500, we can see it doesn't look so bad anymore, even with this sharp decline recently. You'd still be in the green by quite a bit, and that's because the S&P 500 is up more than 2 times in this time period. And now zooming out even further, looking at the last 60 years of the market, we can see the S&P 500 is barely down on this dip. But more importantly, the thing to realize here is how the market has performed over the very long term. We've had major events over the last 90 years, and I assume you guys know some of the big historic things that have happened over this time period, including conflicts between countries and other outbreaks and everything in between. We've also had many recessions during this time period, like we see here, which are highlighted in gray on the graph. But one thing remains consistent time and time again. We always get through it, we always recover the losses, and we always end up moving higher. The common elements here really are time and patience, and essentially what this means is that you need to give the market time to recover its losses, and you need to be patient during these times. And guys, this time is not going to be anything different. In the short term, companies will suffer, earnings will get hurt, and unfortunately some businesses may even go bankrupt. And really at this point, it's almost inevitable that we will be going into a recession if we're not already in one right now, because of how drastic and how quick we've had to really cut down on economic activity over the last few weeks. But remember, the light at the end of the tunnel is the graph that we just saw. We will get through this and we will end up moving higher over time. Now, how quickly we get through this and when that happens is really up in the air and is really anyone's guess. I'm not here to predict when that's going to happen. I'm just here to restate the fact, and that is that we will get through this. It really depends on how quickly we can contain things and how quickly we can stabilize. But just remember the light at the end of the tunnel. This time it's different is something that a lot of people said during pretty much every single downturn that we've had in the market, including the dot-com bubble, including the great financial crisis that we had in 2008. Every single time the common phrase heard was, this time it's different. But guess what? At the end of it, it wasn't. We recovered and we moved higher. So this time is not different. We are going to suffer in the short term, but we are going to recover over the long term. So one thing that I really want to put into perspective here is that currently we are going through a really tough time in North America, the US and Canada. But we got to remember where this outbreak really started, and that was in China, and it initially spread to a lot of Asian countries. So we can look to them to see how things are expected to go with us here in North America. Remember, China was shut down for more than a month, and this is going to happen most likely here in the US and Canada. So let's look at some data here as to how things went, what we can expect, and kind of take a step back here and just look at facts for once. Here we can see that it took nearly a month for cases to peak in China, but in recent weeks, we can see that the total cases are on a big decline, and this is a very positive trend. This means that it's under control, it is contained, and the economy there can start going back to normal. And this can be seen by companies like Apple, who have already reopened all of their stores in China after about a month of being shut down during the worst of this outbreak. Now, this can also be extended into other countries like South Korea. They started reporting cases back in mid-February, and only now, about a month later, are we seeing some sort of stability with the number of active cases. This is in line with how China did as well, and if things continue down the same path, we should start seeing the cases in South Korea start to decline sharply over the coming weeks. Now in the US, unfortunately, things are just getting started, and cases here have started to really pick up over the last few weeks towards the end of February. So using the same information and extrapolating it for the US, this would mean that we would actually peak at the end of March or pretty much early April. So the worst is still yet to come. But just remember, South Korea and China both have stabilized over this time. And if you believe the US healthcare system is strong and the government is doing what they can here to control this, this will be the same outcome here for us as well. All I can say right now is have a longer term outlook. The next week or two can get pretty dark, and I think lockdowns are very likely. But come April, the worst should be behind us if you believe in our healthcare system. So now, how can we benefit from this stock market crash, this recession, this dip, whatever you want to call it, and come out with big gains and potentially as a millionaire? So I'll tell you what I'm personally doing right now. So this is key, and you've heard this time and time again from me. Do not let fear and emotions play a role with your decision making when it comes to your finances, especially when it comes to investing. Panic selling on the way down or FOMO chasing on the way up usually results in stress, disappointment, and sometimes even losses. So just take a step back, don't let emotions cloud your judgments here and your decisions, and make rational decisions during these times. It's important to stay aware of what's going on in the world with all of these issues, but you should not make your decisions on fear or on fear of missing out, because more often than not, you will end up losing. So I've mentioned this a lot in recent videos, and if you haven't heard, pay attention here. Focus on quality companies that are down because the overall market is down. Many blue chip companies are going to be down here during these times, but they have proven time and time again that they can weather the storm and they can come out stronger from any sort of crisis. These are the type of companies that we want to keep focusing on, keep building our positions in. And if you want to know some names of companies that I think fit this category, you can think of companies like Starbucks, Microsoft, or even 3M. These are blue chip companies. These are companies I don't believe are going anywhere. And these are companies that I think will come out of this potential recession here much, much stronger. So build your portfolio with these blue chip names, because in the end, these are companies that you can be confident in that will weather the storm, will not go bankrupt during these tough times, and may actually start acquiring smaller companies if they start struggling, which will only strengthen these large businesses over time. The third thing that I am doing right now is dollar cost averaging into my position. The market, as you know, is down 30% from its highs in just a matter of weeks. And one thing you got to understand is that when the market is down 30%, it means that a lot of individual stocks are down much more than that, maybe 40, 50, 60% or more. So the question is, have we bottomed? I don't know. I don't think anyone out there really does know or can figure that out. But what I do know is the best strategy that I've found during these times is to just consistently dollar cost average and just keep buying stocks on the way down. This is what I've been doing over the last few weeks. I look for incredible blue chip companies. I buy them. I average down on a weekly basis if they've moved lower, and I just keep building up my position that way. Now, in some cases, those blue chips may stay relatively the same or move up a bit higher as well. But if I still find value in those businesses, I will continue buying in. So essentially what I do is I buy, Next week, I check the stock. If it's down even more, I buy. If it's still at a good value, I buy. The following week, the same thing, good value, I buy. And I just keep lowering my cost basis this way if the stock keeps going lower. Am I going to catch the bottom? Absolutely not. But I am going to have a cost basis that I'm happy with that is going to be significantly lower than if I just waited for the bottom, waited for a recovery, and just hoped that I caught the stock on the way back up. Because I know based on my own experience that that does not work. It's very difficult to time a stock when it starts recovering. And more often than not, you're going to be left disappointed because you thought you caught the bottom, but it ends up moving even lower from there. FOMO and really chasing the market back up when it is recovering isn't something that I'm a huge fan of. So I rather just continue dollar cost averaging, lower my cost basis if we move lower, and just stick to that strategy. And I think by sticking to these 3 simple strategy tips, any investor can come out on top from this market crash that we're going through right now. These are extremely uncertain times, but these are times that you wish you would have bought in when you're looking back at the stock market a few years from now. Now, that being said, I would say that you want to have a time horizon of at least 3 years here. That's what I'm personally looking at. Some stocks may recover much sooner than that. Some stocks may take a bit longer than that. But depending on how low we go here and how severe the sell-off is, I think that we may actually bounce back at an even faster rate and recover even quicker. Now, with my strategy, if I just continue averaging into the market every week, every couple of weeks or so, lowering my cost basis if stocks go even lower, and buying these incredible companies, I'm confident that I'm going to have some pretty big gains in the next few years as these stocks recover. Just like the bull market where, every sort of dip was considered a buy the dip opportunity, I consider this another buy the dip opportunity. However, you just want to modify your strategy just a little bit so you're not putting in too much cash as we're going lower, because you want to average it out over time like we talked about. Now, if you want to hear about what type of companies I'm buying, maybe some names of companies and reasons as to why I'm buying them, let me know in the comment section down below and I can create a video on that for you guys. But I did briefly mention some in this video, like Microsoft and Starbucks, because those are companies that I believe are going to be much stronger companies in the next few years. They've been beaten down quite a bit from this market correction or crash that we're going through right now. And I think that the sell-off in these stocks is a bit overdone. But of course, apart from these 2 companies, there are other companies that I've been buying which fit a similar mold here as to these 2 companies. So if you want to hear more about them, let me know in the comment section down below and I can create a video on that as well. So I'm going to close out with this graph again here just to remind you that the market has gone through a lot over the last 90 years, and this will be just another one of those time periods that when we look back on in 5 years, we will wish that we bought in. So don't miss out on this opportunity to help you become that much closer to being a millionaire. What I'm going to do is focus on the long term, focus on great companies, and just focus on averaging in over time. Because the last thing that I want to do is to look back at this time period in a few years and say, I wish I knew that this time was not any different. Guys, thank you so much for watching. Don't forget to invest positively, and I'll see you in the next one. Peace.